Following a pretty horrific day for Tesla, Tom Lee was on CNBC today and specifically references Tesla and other Mag 7 stocks that bottomed on Monday and cites that as a reference to why he's a little bit more optimistic on Tesla and on some of these other Mag 7 names. Now, here in this video, we have a lot to go over. I will share my thoughts and perspectives on this market. What happened today literally hit a circuit breaker level. Did not officially get a circuit breaker, but it's a very clear sign that there is deeper issues here than most of us even have thought about. And I will explain what I mean by that in this video. We also have some data coming out tomorrow that Wall Street is going to pay attention to, and big bank earnings, which I wouldn't look past that because the markets, they're going to pay attention to what the banks say about tariffs, about the economy, about people's spending patterns. And, well, it's going to give us maybe a little bit more reassurance that we're not going into a recession, or it could create full-blown recession panic. But first, before we get into all of that, take a listen to what Tom Lee said about Tesla and about Mag 7 stocks on CNBC earlier today.
Lows right now, giving back just about a portion of yesterday's gains. Our next guest says yesterday's big rally confirmed the Trump put is back. Tom Lee, Fundstrat Global Advisors co-founder, managing partner, and head of research, joins us here at Post 9. Tom, good to see you. So yeah, we were in search of perhaps some kind of a floor level of a Trump put. Maybe we got there. I guess, first of all, let's go to what history says about these extreme type market conditions, right? We saw very, very rare levels of forced liquidation, washout conditions Friday, Monday, set the scene for the kind of forced buying, panic buying in a sense yesterday. But where does that leave us? Because a lot of those huge one-day rallies have happened in bear markets.
Yeah, I agree. I mean, you know, investors, I think, were fearful we were being pushed into the abyss of a depression. And there's a lot of technical damage that isn't necessarily fixed by just having a one-day rally. So I think that investors are understandably cautious. But one thing that my friend Tom DeMark likes to call is washed out markets. Yep. And I think some things really got washed out, and that's what we're going to keep an eye on. I think it's actually kind of constructive. Like the Teslas and the Mag 7, you know, they basically bottomed on Monday. Yeah. And so even though the markets were plumbing new lows into Wednesday, they were holding up, and they've made a big move. So I think there's an argument to me that high beta and the Mag 7 are what you want to watch. And I'm kind of in the camp that this is going to extend further, the rally.
So, I mean, you were bullish going into this whole thing, right?
Yes.
I think everybody did not expect it to be so severe. After yesterday, how much changes fundamentally around your bullishness? Because it's great that he paused on all the other countries, but as we mentioned, we are still going to have to face a lot of tariffs, and that could hurt growth.
Yeah, I mean, I think the upside case for stocks is impaired, right? Because the Fed has made clear during the midst of this that the Fed put, it really isn't in play until they have a better idea of inflation. I mean, we just heard that again. So I think markets then have to depend on fundamentals and then a policy path from the White House that they can't necessarily depend on. So I think markets are going to put a bigger risk.
But can they depend on it? I mean, the White House did make it clear that they would be flexible if things really started to get shaky.
Yes, but at the end of the day, I think companies aren't going to get hit as hard as we initially thought. For instance, even looking at these revised tariff rates, to me, there's still the ceiling. So even if this is what's in place now for 90 days, I think there's a chance things could still improve from there. And of course, it could be better for U.S. companies, and there could be concessions made for U.S. businesses. So do I think stocks, do I think stocks are an easy road from here? No, I think it's going to be very challenging. But again, I think so many things got washed out. I think the Mag 7 especially, that's where you're going to find opportunity.
You do. All right, the Fed put may not be there, but what about the Trump put? Is it back?
It's in the bond market.
And can you rely on it?
Well, it's got a different variation, right? Because it is driven by instinct. So there's not a level that's going to make a difference, or how close to recession do we get? So
we don't have a handle on the reaction function, as we would say with the Fed. Yeah,
that's right. It's like it's a blunt instrument that we don't know where it strikes.
Right.
But at the end of the day, I know U.S. companies are going to be very innovative. I mean, for instance, if they have higher import costs, they're not just going to pay higher import costs. They're going to be very innovative on cutting costs, which just means AI spending should be a lot higher and automation spending. So, I mean, it's actually good for tech over the next 12 months.
We could see a reduction in employment, though, right?
Yeah, I'd say, that also, again, acts as a stabilizer, because to the extent that Main Street jobs get lost, I'm not sure then we can say that these policies are good for Main Street.
Again, it was a rough day today. For most of the day, Tesla was down over 10%. And I mean, that's not what you wanted to see following yesterday. In fact, I actually thought that this could create a more of a risk-on environment for at least another day or two. I was actually signaling maybe another 6% upside for the S&P, potentially getting back to that 200-day moving average, probably find some resistance around that level, trade lower again. No. You had that 10% move yesterday, down 6% today. I mean, that's rough. Okay. Let me just give it to you just honestly here, as honestly as I possibly can. There's a bigger crisis going on than we even understand. You can see this a lot in the bond market. The reason Trump actually caved yesterday and did the pause was because of what was happening in the bond market, the implosion in the bond market. Bonds had fallen. TLT was down 3%, it was down 2%, and then yesterday at the low of the day, it was down like another 3%. It was getting really bad in the bond market. Now, I think that's where a lot of our problems are coming from, is the bond market. Because what's actually interesting about this sell-off and about this, 20% crash that we've seen in markets is normally when you get that, you actually see investors go out and buy bonds as like a flight to safety. That didn't happen. That hasn't happened. That signals to me, and what the Wall Street Journal reported today, that there are some large investors in U.S. bonds that are selling them. I mean, probably China and Japan. The only way to really put pressure on the U.S., if you're China, Japan, or really most other countries, is to put pressure on our financial markets. The only way you can really do that is by pressuring the bond market, because those countries own a lot of U.S. debt. Japan owns the most, and then China is second behind. And China's been selling our debt for a long time now, for the last couple of years. But you're definitely seeing some pressures there in the bond market, which is feeding into larger pressures in the stock market, okay? Because even think about it like this, with consumers slowing down, with, tariffs looming, and that is likely going to slow things down even more, you also have bond yields that are skyrocketing, that are slowing down the economy from that perspective as well. It's like a triple whammy. And there is just no relief in sight. Now, I actually find it very alarming, very, very alarming, that Trump caved, is talking about making deals with countries. Essentially, we're going to have lower tariff rates than we thought, but the markets don't care. The markets sold off today. That is very concerning to me. I don't know about you guys, but I don't know how much better it's going to get in the near term with that kind of backdrop. I mean, sure, could Trump cancel the China tariff? Of course. Is that even going to be enough to reverse this? Has the damage already been done essentially from these tariffs and the, weakening in the economy? Has that already happened? Are we too far gone for that? That's what this looks like to me. I didn't expect that. I thought that if we clearly got a risk-on catalyst, like a pause in tariffs, it would be good for a couple of days, right? It wouldn't be a one-day, boom, you give it almost all back the next day. That's scary, depending on what side of this market you are on. So from that perspective, it's hard to be bullish in light of this reaction in markets. And ultimately, it depends, do we go into a recession or not? And, again, we're not pricing in a recession right now. right? We all know that. We're not pricing in a recession. Even though we've fallen a bit, we've fallen quite a bit, you're not pricing in a recession, right? Where do you have to go to price in a recession? Do you have to go back to the midpoint of 2022, call it 400 on the SPY? Maybe. Do you have to go lower than that? Maybe. Just depends how deep the recession is. And I think that's what Wall Street's trying to figure out right now is, hey, if we're going into a recession, how deep is it going to be? And, again, we're not pricing in a recession, but if that's the kind of narrative that continues to play out, you're going to continue to weaken. Now, I think the markets also don't like the fact that the Fed is not coming to accommodate the markets. Like the Fed taking inaction right now is also raising the odds of a recession. So you have all of these things working against you. Sure, a delay of tariffs is good. It's not bad, but it's not enough to save things. That's the conclusion that Wall Street is coming to. So from that perspective, I don't see the Fed caving anytime soon. At least that's not what they want to do. They will react to the bond market if the bond market continues to sell off in this fashion. I don't really see Trump. What can he do at this point? Take the tariffs off China? If that works, great. If not, you could be looking at a full financial meltdown. And, that's definitely not an ideal situation to be in, nonetheless. So we definitely want to be careful here. You want to be cautious. Honestly, if anyone tells you they have any idea what's going to happen to markets, they have no clue. Okay? No clue. I don't have a clue. You don't have a clue. The next guy doesn't have a clue. Things are developing so fast that your guess is as good as the next guy. In fact, we had a much better than expected CPI report today. What happened? Well, nothing. That didn't do a damn thing for markets. Markets didn't care at all about that CPI report. I think they're really waiting for the Fed to pivot and show a little bit more confidence here. That's kind of what it looks like to me, because the only one that's really going to be able to help prevent a recession is the Fed at this point, right? It is lowering rates and making things more accommodative and less restrictive from a monetary policy perspective. Now, tomorrow morning, you are going to have earnings from JP Morgan, BlackRock, Wells Fargo, BNY, and Morgan Stanley. I don't think the actual earnings matter. Again, it's the commentary around the consumer, around the economy, around markets, around this volatility we have seen, around tariffs. Those are going to be the headlines that people pay attention to. And that's what is going to move the markets potentially coming tomorrow. You never know, right? But that's what I would expect to move the markets. Now, tomorrow morning at 10 o'clock in the morning, bank earnings usually come out like early in the morning. You start getting that commentary like 7 o'clock in the morning, Eastern Standard Time, all the way through the morning, okay? So there's going to be a lot of headlines coming out at various different times. But at 10 o'clock in the morning, you will get Michigan consumer sentiment. Headline numbers expected to fall from 57.0 down to 54.5. So you're expecting quite a bit of weakness. Across the board, really, consumer expectations are expected to fall from 52.6 down to 50.3. That's a big fall. Current conditions are expected to fall from 63.8 to 61.4. That's a big fall as well. 5-year inflation expectations are expected to stay the same at roughly 4.1%, and 1-year inflation expectations are expected to remain at about 5%. So if those go up, that's obviously not ideal for markets, but we know this is a political survey. We know it's very flawed. Markets, though, have reacted to this Michigan Consumer Sentiment Survey for the past couple of months, though. So I wouldn't rule out the markets, again, reacting to this coming tomorrow. Although, I think at this point, we have bigger problems. Let's just be honest. Today really highlights that. And although I don't know exactly where markets are going next or where Tesla is going next, what I can tell you is you want as much cash as possible. You want as little margin as possible, if not zero margin. If you're confident that this is nearing the bottom, then whatever. Do what you guys want to do. I'm not a financial advisor. I'm not a financial planner. I'm not willing to make that bet. So I think you want to be prepared for whatever happens here, whether markets go up again or whether markets continue to fall, because, any one of those scenarios could happen. Markets could trade sideways for a very long time as well. That is, again, another possibility. What I also see that's a little concerning is, even though you went up a lot yesterday, you went down a lot today, like the weekly RSI is at 32.48. So you're no longer oversold. The daily RSI is back to 39. You're no longer oversold. So you now have room again to come down, hit new lows, and not be quote unquote oversold. And that's something I've kind of pointed to in recent weeks throughout this correction, that, when the RSI gets oversold, you bounce. When the RSI, goes back to more of a neutral level, you sell off again and you're back to a neutral level, even following today's, sell-off, which could continue to kind of put downside pressure on markets. So let me know what you think about this down below in the comment section. I would love your thoughts on this, because, again, your opinion is honestly as good as mine. It's as good as JP Morgan's or any, Wall Street fund manager. Like, they don't know any more than you do, especially when markets are just not acting very rationally. Like, you would not expect after yesterday the S&P would be down 6% today. That doesn't make sense given we had a 90-day pause on tariffs. Hey, what do I know? Let me know what you think, again, down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.